Welcome to 3B Mortgage Brokers. I'm Russell Cunha, and today we're going to be discussing credit scores. One of the most common situations and questions I get is I will ask a borrower, do you happen to know what your credit score is? And they'll tell me something like, sure, oh yeah, I check it all the time. It's 700. And then I pull their credit and I find out that it's actually 660. What's going on here? Well, let's get into it. That's what we're going to discuss today. To start off with, there are brands of credit scores and there are versions of credit scores. So the first thing we're going to look at is the two brands of credit scores. One is FICO and the other is Vantage. Each of these brands of credit score scores your credit differently. They use different weighted averages to select how they're going to put a numerical system against what's been reported to the three credit bureaus, which are Equifax, TransUnion, and Experian. So let's take a look at that. So we have FICO versus Vantage. Both of them have a different weighted scale for how they're going to look at what's reported to the credit agencies. They both have payment history. So that's going to show up at all three bureaus. And as you can see here, FICO gives 35% weight to it, whereas Vantage only gives 32% weight to it. Let's say you got a credit card while you were in high school or right after high school, and it's got a really high interest rate on it. That's fine. You want to keep that because even if you have a newer credit card, let's say you've got one in your mid-20s to late 20s, it's got better interest rates on it, but you've only had it a couple of years, yet you've had this older credit card for 5-8 years. Keep that because length of credit history weighs on your credit score. The Vantage score will score your credit higher than the FICO score will. That's just because of the way that they've weighted these things. Now they're both very similar, but Vantage will score it higher. What we happen to be looking at here is this is known as a FICO score 8, and this is a Vantage 3.0. So just be aware that Credit Karma and other credit monitoring services use the Vantage system. Most places out there will use Vantage. Now, why do we want to look at FICO scores? Well, FICO is the only scores that are used for mortgages. So if you're getting a home loan, it's going to be a FICO score no matter what. So let's take a look at the different types of FICO scores. And just be aware that FICO has over 50 different types of scoring models. So we're going to look at some basics right now. Equifax, for a base score, FICO score 10, 9, 8, 5, 4. There's that FICO 8 I was telling you about that is equivalent to the Vantage 3.0 that you're normally seeing. So they'll all utilize that score in there somewhere. Now this is just for a base score. It's not for mortgages. Mortgage scoring is 2, 4, and 5, depending on which one of these credit reporting agencies we're talking about. But I just wanted you to see that there's a lot of different scores in here. All right, let's look at the different weighted averages that they're using to get your FICO score. Again, we're still sitting on a FICO 8, which is an average or general credit score for general issuance of credit, not for mortgages. Keep that old credit on there because that will help improve your credit score because length of history is 15% of what they're looking for. Now, if you've applied for a bunch of loans, it can drop your credit score. So don't go applying for lots of different loans. They're looking at credit inquiries to see what you're doing. They're trying to hedge their bets. If you're looking for a lot of credit, if it shows that you've applied for a lot of different types of credit, then they're going to think, gosh, this person's really going to go into debt. So we want to be cautious with them. This slide here shows a side-by-side comparison of a Vantage score and FICO scores, both pulled on the same day. See how Vantage scores so much higher than any of these FICO scores over here? I've mentioned the FICO score 8 several times. Let's take a look at what that's used for. It's really a general purpose credit score. It's mostly used for credit cards, auto loans, personal loans, and student loans. And like I said, FICO score 8 is not used for a mortgage at all. When your credit is pulled, there's going to be 3 different numbers on there. One from Experian, one from TransUnion, one from Equifax. Now, how do we decide which one we're going to use? Generally, when I'm talking with a client, they're going to pick whatever the highest number is and say that's their credit score. And it may be for other purposes, but for a mortgage, they're going to take the middle credit score. This is what it would look like. So you may be thinking that you've got an 801 credit score. When I look at it, I see a 759, and that's different interest pricing right there. Let's say that you and your spouse or someone else is looking to get a loan, and I have to pull 2 sets of credit scores. They're going to take the middle numbers from each borrower and then take the lowest of the middle numbers. And that's going to be the credit score that's used to determine the interest rate on your home loan starting out. Each of the credit scores that I'm looking at are from one of the 3 reporting bureaus. So let's look at kind of how they judge what they're going to be doing. We'll start with Experian. Experian uses FICO 2 for mortgages. As you can see here, it's more sensitive to late payments, especially on mortgages. Penalizes high credit utilization more than newer models, and treats paid off collection accounts as a negative. That's just how Experian looks at it. If you have an old paid off collection account, it still hurts your score. Late mortgage payments are heavily weighted. Now remember, this is just one of those 3 scores that we'll be looking at. Next, we're looking at TransUnion. TransUnion uses a FICO 4 score. It's very similar to the FICO 2, but slightly updated, and it still penalizes for paid collections. It considers the age of the accounts heavily and weighs credit mix and installation loans more than FICO 2. And here's the impact. A mix of credit types, credit cards, auto loans, mortgages helps your score. Keeping old accounts open improves your score as well. I mentioned that earlier. Let's take a look at Equifax. Equifax uses the FICO score 5, and its focus areas are similar to a FICO 4, but optimized for Equifax data. Still penalizes paid collections, emphasizes credit utilization, and recent inquiries. If you've applied for multiple loans recently, your score may drop. Keeping old accounts open improves your score. I really can't stress it enough. If you have old credit cards, don't get rid of them. Unless you've got at least 20 years of credit history. If that thing's more than 20 years old, get rid of it. You're fine. But other than that, just hang on to it. You want to keep that around because it's going to affect your credit score. Now, I know discussing the different credit scoring models of 2, 4, and 5 gets a little bit into the weeds, but I wanted you to see that for a reason. Because when I pull your credit report, I'm going to see anything on there that's derogatory or maybe a late payment, something like that that's in there that could be dragging your credit score down. So I need to go through that and kind of get an idea of what it is. If you go and get a free credit report, which is absolutely recommended, let's take a look at that. This is where you can get free credit reports. Annualcreditreport.com, and then Experian.com, Equifax.com, and TransUnion.com. Understand that the reports you're going to get here are not for mortgage purposes. These are general credit scores. So like with Equifax and TransUnion, you're going to get one of those Vantage scores. Experian's going to give you a FICO score 8. Annualcreditreport.com, it does not include any FICO scores. It may have a Vantage score in there, but it does have your credit history in there. And that's what you want to see. So if I'm looking at the credit report that I pulled for you and you pull your own credit report, the credit scores may be different, but all the information below that is the same. So we'll be able to reference that together and say, look, I see this on here. This needs to get taken care of. We need to call and do something about this. Maybe things are showing up on there that you didn't know about. You definitely want to keep up with your credit report to make sure that somebody hasn't, one, gotten a hold of your identity and started charging things on there that's really dragging your credit down. And two, make sure it's all accurate. You know, sometimes you paid something off or had an agreement with someone that you were going to pay something off and they didn't live up to their agreement, or the message didn't get through to the person in that department. So they're still reporting it. So you need to reach out, contact them, and have all of that removed to bring your credit score back up, because it can make a huge difference in the percentage that you're going to pay for a mortgage. Let's say you want a copy of your FICO score. You can get your FICO score at myfico.com. All FICO versions, including mortgage scores, are available through myfico.com, but you have to pay for it. And you're going to need to request that you get scores 2, 4, and 5, because those are the ones that are used for a mortgage. And let's not forget, as I mentioned in a previous video, optoutprescreen.com. You definitely want to go there. Do this, register with them before you get your credit pulled, because those credit reporting agencies, Equifax, Experian, TransUnion, they will sell your information to telemarketers, and you don't want that. So this is the do not call list, the people you contact to get off of there. You can register electronically through the website, and that will opt you out for 5 years. And it takes about 5 business days for that to go into effect. Because it takes 5 business days for it to go into effect, you want to get that done as soon as possible, and then contact me and we can start working on your pre-approval process and getting your application all filled out. And that gives us enough time for the opt-out pre-screen to go into effect so that you're not getting harassed night and day from these people. Anyway, I hope this was informative and helpful. If you have any questions or you know anybody that's interested in getting a home loan, reach out to me. My contact information is below. All of the information in this video, all the websites and everything and links, that'll all be in the information below. Be sure to like and subscribe, and don't forget to register with optoutprescreen.com before getting your credit pulled. You can check out those details by clicking the link here or in the description below. Have a wonderful and blessed day.